Attendees are in listen-only mode.
Testing. Testing, testing. Video okay, audio okay, and no babies in the background either. Yeah, Stefan, that's right. I'm not at home right now, so no babies crying in the background. That is true. Yeah, apologies for that the other day. I couldn't really help it. Stefan's got 303. Yeah, I mean, they're joy, right? My boy's 6 months. He just started teething here last month or so, and he's almost 7 months now, but yeah, he gets a little fussy. All right, so everyone, how are we doing? Hopefully we're doing well. We've got a good amount of things to talk about here because, we've all been involved, obviously, with some trades, but we've got some trades that I really am quite excited about, which is dangerous, of course. You don't really want to get, excited about a trade. It conveys emotion, right? You want to be as detached from it as possible. But look, obviously, as per the video I put out over the weekend, I do think that there's a heck of an opportunity here in the British pound. And that's where I'm going to start. So I'm not going to go over all the stuff that I went through in video, obviously, just because the video itself goes over it, and it's like 15 minutes long, so there's a lot there. But the pound is just kind of churning here in the near term. So what I want to do, I'm going to bring up a chart. I'm going to talk about entry in pound dollar, or how we're going to go about this from here. So first, I'm going to get rid of everything, and just so I can walk us through what to look for. So first off, we did have, this is last week, right? This was NFP, okay? And again, one of the best ways to start off your month, obviously, after NFP, okay, is to, especially if you have setups and some trades that you might be watching, or looking to get into, is to draw that NFP close line, right? And that was right there, the 9 o'clock close last Friday at 52.94. That was resistance. Today, actually, did provide some resistance. We were, I was kind of looking to see if we'd get 53 or not. Because if you would have gone short here, I mean, the place to put a stop at that point, I would have had to, say, put a stop up at 53.60 or something. Would have been like a 70 pip stop, looking to do a little better than that. So from here, I'll go to a 15-minute chart. From here, we're going to look at a couple slopes. The pattern that we've got here, Elliott-wise, 1, 2, 3, 4, 5, okay? And this is probably just W, X, Y. Either way, whatever you want to call it, it's a flat, okay? You get the first rally, you get a new low, you get another high above the origin of the, the recovery high, okay? And this fits very well as a second wave. Especially in the pound, which does tend to jerk people around, especially before it moves. So this is a slope that we've been following a little bit. Obviously, the ideal short would have been up here. Okay, didn't get that this morning. But here we are now at the bottom of this thing, which is very interesting. And that tells us that the slope is actually exerting some influence here. Okay, now what I want to talk about as far as the entry, this is a technique, call it qualifying the fork, okay? Let's call it qualifying the fork. What I mean by that is, sometimes you'll see on my charts, you'll see a pitchfork that might be like grayed out, like in light gray color instead of, black. When it's in gray, that usually means that it's not qualified yet. What I mean is it's a possible slope. it's not really, hasn't been really confirmed yet. So when, you know, when I draw this one here, this would be gray, just because you haven't really touched, since you were able to draw this, okay, which basically is just this morning, you're not necessarily able to qualify it yet as an important slope because you haven't touched the median line yet. So what you want to see is for price to touch the median line, then you can put it in black, and then it, you know, becomes more of a something to work with, rather than, you know, at this point it's kind of just a guess that this is the right fork to look at. You know, there is some action around it, whatever. But let's say that the market, you know, bounces a little bit from here. Maybe we get a little dip down here. Maybe we test the lows or something from the other day at some point. And what you'd be looking for then is for resistance from the upper parallel. So let's just say, for argument's sake here, let's just pretend that it's qualified. And the best entries with pitchforks that I've, you know, kind of come to notice over the years here is that when you get an intersection, okay, it's like an X, right? You get an intersection where, you know, in this case you'd be looking for resistance from the upper parallel, which would be this line here, okay? Call it, make it red or something. Make it the red line, resistance line. And then you've also got a slope in the opposite direction. In this case, it would be the median line, okay? It'd be an intersection, a confluence, whatever. And that is kind of the ideal, you know, place to trade. Okay, you're really trading around the edges at that point, is what I like to say. And you know very quickly if you're wrong, and a lot of times even if you are wrong, the market will at least pull off of it a little bit, giving you a chance to scalp a little bit or something. But in this case, because we do have the possible, all the information suggesting that we could get quite a move in the pound in the ensuing weeks and whatnot, you know, I'd be just looking to short anywhere on this line, whether it intersects here or not. You know, it stops above today's high, 53. Make it, you know, 53.05 or something. What do we have here? We got dollar CAD. Dollar CAD's actually, I'm not going to talk about it just yet. Dollar CAD is getting up into resistance here after the reversal. We'll talk about it here in a second. It's possible that I take a trade during this webinar with dollar CAD because I'm looking for resistance in dollar CAD from basically 26.53 to 26.71, and we're currently trading 26.48. So keep your eyes peeled for dollar CAD. So that's what we're looking for with pound. Is basically a touch, you know, up here, some sort of recovery. Now remember, we've got the daily reversal level in the pound dollar at 52.49. Okay, and you know, that could become resistance as well, you know, at some point in the future. If, say, the market just totally fails here, comes off, then it may becomes resistance in the, you know, at some point tomorrow. In fact, there's actually, it would intersect this fork tomorrow if this ends up being the right fork, the right slope on a near-term basis. It would intersect it tomorrow around U.S. The equity open at 9:30 in the morning. So that's how we got that. Gert's got a good question, actually. He says, why wouldn't you take a short on pound CAD if you're looking to short pound dollar and dollar CAD. Well, I guess it's a preference of styles, but I've had much more success trading dollar crosses than trading non-dollar crosses. It's just the way it is. For example, recently we've been long dollar yen, right? Well, there have been times where I've been trading, on an intraday basis, euro here and there, whatever. If you end up being long or short pound dollar and short dollar CAD, you're short pound CAD, okay, so be it, whatever. For me, it's a lot easier to manage the positions by trading the separate legs, right? So if I end up shorting pound dollar at 152.70 tonight or something, and dollar CAD ends up getting a short entry at some point tomorrow too, I'll be short pound CAD. But if the pound dollar, we trigger short pound dollar. To be quite honest, we should trigger short pound dollar, and which I like a little better than dollar CAD on the short side anyway, just because dollar CAD, you are picking more of a top up here with dollar CAD. It's a little more difficult. With pound dollar, it's come into a big level. We've kind of made a big case for it as far as the way it's acting, 20-day high, all that stuff, the momentum, blah blah blah. Let's say that dollar CAD never actually really sets up that well, and then it just blows through or chops around or whatever. I'd rather have a bigger position with the pound dollar than the dollar CAD anyway. So at the end of the day, pound CAD short could work, but pound dollar short might be even better, and dollar CAD long or dollar CAD short might not even work, right? I mean, with pound CAD, you really are picking a huge top, and it's obviously extremely difficult to do. So I guess to answer your question is, most times you're going to like one better than the other, okay? Like with the Euro Aussie earlier this week, Euro Aussie trade, it would have worked out. We got stopped out though, right? Because I liked Aussie dollar short better than Euro Aussie long, but I put in that Euro Aussie long because I was like, whatever, it's a good reward to risk here. And, it could, give us a couple hundred points on the upside, but the risk is fairly tight. So, in hindsight, obviously, it probably would have been best just to wait for the Aussie short to set up, which it did. All right. I liked the Aussie short better than I liked Euro long against Aussie. So why not just trade the Aussie dollar short? I mean, I hope this makes sense. I guess, it's a style of, preference, whatever. It's just a lot easier to manage the separate legs when you're trading pound dollar. You know the levels a lot better. I know the levels in pound dollar. I know the levels in dollar CAD. Pound CAD, I don't know the levels. The thing swings around like 300 pips every, 2 days. I mean, I don't, it's, every once in a while it's great for a huge idea, like especially if you're trying to, you get a huge base or something. Like I can think of Euro Aussie back in 2012. That thing came into a huge low and then it consolidated for like a year and ended up, making a giant inverse head and shoulders pattern. That was fantastic. That was a huge trade, okay? But, those opportunities are few and far between. This is a dollar CAD minute chart, by the way. Yes, Sandeep, at the end, an individual choice, right. And, I guess as I think this through a little bit and talk about it, the best thing I can say is that I'm just so much more comfortable trading with dollar pairs. Again, I know how they trade, right? I understand, the pound dollar, the way it trades, how it trades around its London Open, how it trades around the U.S. Open, dollar CAD, how it trades, dollar yen, how it trades. But when you're looking at the crosses together, you're combining all those forces, and it just makes for a much more difficult and uncertain outcome, in my opinion. Again, more than happy to take a bigger cross trade if the setup is just beautiful and it's there. Usually going to be a much bigger opportunity. Okay, so don't act like I'll never trade these things, but just in general, I like to express the ideas a little better through the dollar legs. Okay, so here we go. I want to, because the markets are moving here. This is the S&P 500. We're actually coming, this is a slope line we broke recently. We're coming into an interesting level because this level could actually provide some support. If this fails, not the end of the world. If this one fails down here, which is like 2048, then watch out. You could get a much deeper drop. So keep that in mind. We're at 2053 and change. Okay. So dollar CAD here. Here we are, dollar CAD. Kind of like the short side on dollar CAD. It came into, we came into this morning. What's that? The month open, 26.96.6. Actually, that was the high tick. We hit the top of this fork. The only problem with trading, this is a little more of a risky trade, and it's not nearly as desirable as, say, a pound dollar short into resistance, because you're not trading with any sort of downslope at this juncture. You've got a nice 5-wave decline. We got what we think could be a triangle B, wave C, but again, you still are calling a top up here. Okay, so here's dollar CAD. Look at that thing come right off a little bit. So it might be worth taking a shot at this thing. We'll see. 26.54 was the high. We're looking for 26.53. 26.71 is a resistance area. Is there, oh, I know what's going on. There's some stupid meeting going on right now, isn't there? What is this thing? There's that Euro group meeting or whatever. Yeah. Okay, anyway. So dollar CAD could be nice. Again, on the short side, it could be set up, it could be setting up, I should say, at this point here. A couple ways to look at this as far as this thing setting up. Great level to trade into this morning, okay? But leaving stops up here, still not my favorite thing to do. Say if we can break here, you can break below the median line here, which has been pretty good support-wise, just support here 2 hours ago, and the top of the structure was resistance. You can get back below here, then you have more of a green light, in my opinion, or the way I look at things, to take a short position for a, on like a retest day, so that, get something like you get back down here and then you get a retest up here at some point, 2640 or whatever, gives you a little more confidence, I should say, in putting a short on. For the first support would probably be about 2540, week open right here. So something to watch for. I think the reward to risk is on the downside in the dollar CAD for the next several days. Let's go to the Aussie, because we're actually still in that trade. The Aussie dollar, I don't know, I have this feeling, and maybe I'm completely wrong, but I have this feeling that the Aussie dollar, the dollar CAD, the Kiwi, all these commodity currencies, and it doesn't make a whole lot of sense Look at that dollar CAD come off right there. I could sit here all day and play with these charts. The Aussie dollar, we've got employment tonight, right? So we're in a position, got 100 something pips right now in the money on that, but still looking for support from this line, the parallel here, which has been pretty good support. I don't know. I just have a feeling that we're in for a period of wider ranging / counter trend moves in commodity currencies with the way they've been trading recently, right? Dollar CAD, as we kind of talked about, touched on the 5-wave decline, the 3-wave correction to this point into this morning's high. Aussie dollar is corrective on the upside, but this is corrective, but this could be corrective. You could have, a larger complex, either triangle or flat pattern or something. We have a huge, as touched on recently several times, we had big volume reversals on daily and weekly basis. Most volume in almost 2 years in 1 week with the weekly reversal we had, and then obviously the rate cut, which was completely erased on last Tuesday's bar. So that kind of action to me suggests a little more sideways movement, slight upward movement, which is interesting because when we look at, here's the Kiwi dollar, touched on this again this morning, or just before the webinar, I should say. I put this chart out. You've got, there is a slope to work with here. Kind of tough to see it, but these 3 pivots here, the median line was pretty good. Daily reversal support here and this median line here. Now this was previously unqualified. I can make it qualified now because we just touched that median line. So you could get resistance up here, okay? But if this thing goes through this line, that favors the idea that we continue slightly higher in the Kiwi for a continuation of the corrective move up into 75.30 to 75.50, and that's when we'll probably have the opportunity for the next big short position. Okay, at least that's what I'm thinking. And again, lines up so well with the seasonal aspects, right? Kiwi seasonality tops this week. Okay, this is on 5, 10, 15, and 20-year basis, and then falls for about 3 weeks. So, if we can get that continued little pop into resistance, I can never find a chart that I want to show you guys. I think this is it. Nope, that's not it either. There's. So we can get that continued pop sometime the end of this week, puts us right here, right? A, B, C, next short position for Kiwi. So, when I look at the commodity currencies, like, they all kind of tell a similar story. Dollar CAD rolling over maybe a little bit. Kiwi dollar, maybe a couple hundred points on the upside too. Aussie dollar, maybe a couple, find some sort of a low at 76.60, 76.85, and continued range of sorts towards higher levels before it can turn over again. So that's what I'm looking at as far as the commodity currencies are concerned, which is somewhat odd because gold, for example, gold just broke down fairly significantly, right? This was a big break, okay? To those that don't know what this was, get rid of all this stuff here. Go through again. So gold, again, was unable to hold when you have a very significant support level and it doesn't hold, it means it's a significant, signal in the other direction. So in this case, okay, resistance, upper parallel. You had a great confluence here. This is the confluence I was talking about earlier. They don't get much better than this, right? But the fact that that didn't hold, this doesn't hold, that points us, now you got to look, now you got to start thinking about a much more bearish structure for gold. Okay, we're riding the median line. Okay, this becomes resistance now. This upper parallel might be resistance here at the down, this former median line here that just cracked. And to me, this probably points down towards the daily reversal level, which on futures is, I think, like 1177 or something. Yeah, it's right here. Yeah, so, this points us towards 1170 to 1180 in gold, which obviously would be a pretty sharp drop from here, okay? You're talking about, $30 to $40 on the downside in gold. That's the implication of this break, okay? And it's not going to happen overnight, at least I don't think so. It probably, we probably get some sort of bounce off of here, one would think, and then you get a much bigger spill at some point next week. So if gold can steady a little bit, maybe rally 10 or so bucks, from here, find some resistance up at 1230, maybe that fits with some sort of a pullback in commodity currencies, or I say a dollar pullback against commodity currencies, and then the big spill lower occurs with Kiwi dollar and whatnot, Aussie next week. Just thinking, about possibility. That's it. So that's where we are with gold and its possible implications on the broader markets. Yeah, with Aussie, let's get back to Aussie. So yeah, Aussie really, I just have some notes here. Aussie, all I wrote for Aussie was it's all about 76.60 to 76.80, right? 76.60, the high volume area here, right? NFP level was the high volume area. That's why we were selling where we did. It's tough to be it takes some stones to be a buyer down here at 76.60 because, look, you're basically picking lows at that point, and you're putting a stop at, just under the lows. You could easily get nicked out before it, finds a better floor. But might be something to think about. Look, we've got the employment report tonight. See how the market reacts to it. I also want to talk about, going into a report with a position. I don't like to just put on a position in front of a report, but we're already in a position. It had nothing to do with the report, right? You're already short the Aussie from up here. So the target I know is 76.85, okay? But, just like I wrote last night with the dollar yen piece, Okay, we talked about the dollar yen piece. It was, an upper parallel is at about 120.25 on Wednesday for those that want to get aggressive on the target, right? The target was 1980. Okay, the official target was 1980, and that's what it'll be marked down as in the trade history. But just as the official target for Aussie is 76.85. Okay, that's 20 pips from now. But strategically, it might be best to tighten the stop up. Well, it's already tightened to here to 77.95, today's high. It might be best to go into the event, without maybe, a target. Might want to widen it out a little bit. See if you can get a test to the lows. Okay. For the official thing, I'll end up leaving the target at 76.85. Okay, because I'm playing this as if it's a range. But tonight, what we got, it's at 8 o'clock, so I mean it's right here. What's that? 76.75. I mean 77.95 intersects there. There is a possibility that I guess you get a breakaway. I wouldn't expect it to last personally. Just as the rate cut here didn't last. Aussie bearish positioning is really significant. It's the largest it's been in a very, very, very long time. So I'd be, very careful on any sort of surprise. Even if the thing comes in line, you're liable to get short covering rally in Aussie. But just in general, you head into a news event, if you've got a nice position, sometimes it's best to just let it run. Okay, I don't think this is one of those cases, but we'll point that out. Finally, here's the dollar yen. Dollar yen snuck a little above its resistance up here, but coming back below, as far as where's the next trade in dollar yen, if it can pop up into 120.70 tonight, that might be an area to start looking for a short. Other than that, I'd be looking down here again for support. Okay, 119.20, 119.60, depending on when or if you get those levels, could provide support. If we start to get impulsive weakness off of here, off the high, then we'll look to see if we can find a downtrend slope to work with. But in general, I'm not, too keen on doing anything with dollar yen just at the moment. Again, if it, like right now, if it can get up here and fail tonight during Asia near 120.70, you might have a short position. Other than that, continue to watch the lower parallel here for possible support. If that ends up failing, then we'll look to identify new levels. Here's Euro Yen. Look at that dollar CAD, by the way, has come off fairly nice. From the 26.53 area. 26.54 was the peak. Come off 20 pips or so since the webinar started. Euro Yen, actually getting pretty close to some more important resistance levels at this point. Obviously, the 34.40 area was not triggered. You could get some support at about 35 now, about 35 pips lower than where we are. Former high here, okay? And you've got a sliding parallel that crosses from this fork, that crosses here. Basically, at the end of today in U.S. trading, about 5 o'clock, 6 o'clock in New York, you could get some support at 135.35 and then get continuation up towards that Fibbo area, which is 136.66, followed by 37.60, which is the 120 high. Okay, so that might be something to keep in mind for, for some sort of a swing. Increasingly, I've got my eye out, starting to, now that we've gotten into resistance for yen crosses, increasingly kind of looking at, possible shorts in yen crosses, okay? 120.25 is a pretty big level to me in dollar yen. So, while I don't have a short position now, or, a long yen position, a short dollar yen position, wouldn't rule one out in the next day or so for dollar yen or another yen cross. Let's actually take a look at pound yen, considering that looking at a possible pound dollar short anyway. So holy mackerel, what do you know? So I didn't even look at this thing recently. I'm dead serious. But look at that. It's an upper parallel shift pitchfork here. Okay. And we're trading right off of it. This, in fact, was the gap from January 5th. Okay. So, pound dollar is at resistance, or pound yen is at resistance, I should say. One sec. All right. Upslopers here. Okay, so something to work with. Check this out. Here's an hourly chart, hourly bar. Look at that reversal you had right there. Okay, that's 183.34, and the high this morning is 183.95. So this line right here, the gray one, this could actually end up becoming resistance, or sorry, support. It was resistance before, right? You can see, the resistance. You got a whole bunch of trading around there, here. So if we were to get a drop, this is kind of called the anatomy of a setup. If you were to get, you have an hourly reversal here, which is nice, at the trend line, okay? So if you were to get a dip into this level, call it 182.50 or so, and then what you'd be doing at that point is you'd be expecting this to act as support because it acted as resistance before. Okay, so if it did, that would actually offer a little scalp long opportunity right there. But the bigger swing setup, because you've come into bigger resistance, is to actually look to short this thing. So say you get a dip, a little rip, look at short hourly reversal resistance at 83.33, okay, with a stop above 183.95. You might want to make it 184.10 or something, okay. Again, this speaks to the before with Gert was asking about the trading of non-dollar crosses, right? Because the pound dollar thing, obviously, we're looking at very closely, and then dollar yen's come into resistance. We got a longs. So, dollar yen's showing signs up here of resistance. It's actually just about 30 pips off the high right now from today's high. So, a pound yen short certainly makes sense from that perspective. But then you got to kind of forget about all that because you don't want to convince yourself of something that's not there. So then take a look at the chart itself, and just based on its own merits, is there anything there, right? And sure enough, there is, okay? Trend line, response. Response was a nice hourly outside bar reversal, pretty good looking reversal, okay? Big 4-hour bar up there too. And then you got your levels mapped out where, you want to know where to expect support. You'd expect support around here, around 82.50, okay? So when you're following a market, you're seeing how it trades and seeing how it's responding to levels, gives you a little more confidence on whether or not to pull the trigger. So if this thing trades down 82.50 and sneaks up a little higher than 83.30, you might want to short there with an 84.10 stop. People will look to take this thing a lot lower, potentially all the way back down to this parallel, okay, at some point. Just for wondering where you would have, let's see, what would that be, 80, what's that, 78, that close there, that is 70, what is this, 178.28, so I'm going to put that up there and see where that comes into play. That's the daily reversal bar, 178.28, 178.28. So based on this, not completely out of the possibilities that you get 178.28 down here, some point maybe next week, okay? Talking 500 points, obviously, from where we are now. Just want to see where these other lines come in. Just one good thing about doing these webinars, a lot of times I wouldn't even look at some of these pairs, okay? Well, that's pretty close too. Pretty close. So there's a lot to work with here, okay, with pound yen. I know a lot of people love to trade pound yen too. Why not? It certainly has some penchant to move. Alrighty. So there we are with pound yen. So look, the biggest thing for me still, is getting in, identifying a nice place to short pound dollar. The whole point of this type of analysis, right, is to get a really good entry, because that way you can trade with more size. Like if you haven't seen the page yet, I think it's actually only on the non-members section, the trades, right? Look at the trade history or whatever, or a word on trade size and leverage. So I'll just read it. Only you know your financial situation and goals. Only you can decide how much you're comfortable risking. For each trade, we indicate trade size, right, which is in the little column, which is not leverage, okay? It's different. So if you typically risk 2% a trade, you trade 4 times leverage on a 50 pip stop. Now, since most of our trades here on the swing section are usually between like 40 and 60 pips, okay, then you can, basically, if you're used to risking 2% a trade, it basically gives you, you already know that you're most likely going to end up, trading 5-to-1 leverage, okay, on a 40, 50, 60 pip stop, because that's typically going to be 2%, okay? Just do, the math, right? 40 pips times 5 is 2%. I mean, if it's 50 pip stop, it's 4-to-1 leverage, okay? So that would be 2%. So, that's the importance of being able to get tight entries. If you get a tight entry, and you can try to get 150, 200 plus pips, whatever, on 5-to-1 leverage, 100 pips is 5%, okay? So, if you have the opportunity to short, with a 25 pip stop, with, say, for pound dollar, for example, let's say that we're able to get a 52.70 entry with a 53, 05 stop, that's a 35 pip stop. If you wanted to risk 2%, on that trade, you're talking about basically 6-to-1 leverage, for 2%. Okay, so that affords you. That's the reason to trade FX. Okay, is to be able to amplify your gains. Leverage gets a bad name because people totally misuse it, and you have idiots out there that will just put a trade on and not use any sort of risk management or whatever. But leverage is a good thing if it's used properly, right? You can if you want to risk 1% a trade, then trade on 2.5 times leverage, right? If you're a total cowboy and you're in this to go nuts, which I don't recommend, but everyone is different, then you might trade more, whatever. And then of course we want to risk move our risk tight, and the better to zero, which would be break even. The faster you can get to zero, the better, right? So ideally the setup works like where you get a move into, say, 52, 65, 75, we're triggered at 70, and then you wake up in the morning and the thing's down here, and then you're like, okay, good, this is great, I can move my stop to break even, not really worry about it, and have a nice little ride. So that's hopefully how it works. Now we do have BOE Carney holds a press conference, Bank of England inflation report. I mean, this is supposed to be pretty big events, right? And pound, as we all know, likes to blow through stops and reverse and do this and that. So, you can't really control that, obviously. At this point, I will stress I'm definitely looking to short 52.65, 75 at some point, and probably have an entry put into tonight's report, but I mean, you can't, with the pound, you can't dismiss anything, right? You could get a rip up into 53, 10, 20, and then the thing reverses and falls lower. So it might be a case where we, have to think long and hard about it. It might be a case where, you stagger an entry here or there, and don't trade with as much leverage, and then we look for, opportunities after the inflation report tomorrow morning to see if we can increase the size or whatever. Because let's be honest, the UK reports, economic reports can be quite crapshoots as far as how the market reacts to them afterwards. So we'll see. I guess what I'd like to see is for a new low down here come on this thing, and then gives us an opportunity to sell a rally. So we shall see soon enough. What's going on here with euro yen? Euro yen coming down a little bit. Again, watch 35.35, especially at the end of the day for euro yen. We'll see where the S&P is trading at right now. S&P still trying to come into this hold up. It's bounced a little bit. All right, so quickly, in summary here for me, I haven't even talked about the euro yet. It's been kind of a mess, right? So the euro, stubbornly been trying to get long for a week, I guess. And it's obviously not been the right thing to do because it just isn't going anywhere. So at this point, we continue to trade off of this. All this resistance up here, to be quite honest, I'd be worried about the euro going lower from here. At least that's the implication from how the market continues to trade at these levels. Okay. Every rally, pathetic, every rally is getting more pathetic. Rallies on news announcements, on headlines, whatever, and then, it's just tightening up. I mean, you could end up getting a triangle here where you get a terminal thrust lower and then you get a bigger rally. I don't know. We'll see. The seasonals for Euro are interesting to note that they did turn bullish after last week, so they're bullish now. And the next time they turn bearish is in about, the week of March 13th. So, ideally, I'm looking for the Euro to hold up so that you can, we can get more bearish at say 400 pips or something. And been looking for a long entry to take advantage of that. Just, each long entry hasn't really worked. So, it is what it is, I guess. But you've got 112.35. That's daily reversal support. Was hoping that if we were going to go lower than where we were last Friday, that the thing was going to dip down here earlier in the week to intersect with some of these lower parallels, and that would have maybe given an opportunity to take a long, for a nice short covering advance of sorts. I'll say that the way this market's trading right now, this is kind of understanding Elliott wave, the Elliott wave implications. The best thing about Elliott is it's kind of an explanation, right, of how markets behave during different cycles. So this here is clearly a three-wave move to the upside, okay? But that three-wave move can most certainly be part of a larger correction, right? Just because it's three waves doesn't mean it's done. You could very well have, another dip here as part of a B wave and then a rally. But the point I'm trying to make is that how the market's trading right now, very quiet, very dull, very prone to, quick headline moves and then reversals. That's very typical of a B wave, okay? And that means that afterwards you get a C wave, which would probably be higher, okay? It's tough for me to reconcile this thinking with the pound dollar and all the evidence we have that the pound dollar appears quite vulnerable. Whatever. You just can't fit it all together sometimes. It's not a big deal. So, with the euro, I'm just going to let it do what it's going to do because at the moment I don't have a very good handle on it other than the fact that it keeps failing at this resistance. So I guess that tells you to look lower at this point. But I'm also very wary of this thing finding some sort of a low, especially at 12.35, which is the daily reversal level, or potentially Friday closer to 11.90, which is the 78.6 retracement of the whole rally. If that were to happen, then then we actually might have some sort of opportunity again. I don't know. We'll see. Okay. Just as it is now, I'm not I'm not too keen on doing anything at this moment. So we'll wait and see what's up with the euro. For the meantime, the next couple trades that are most likely to be entered via orders on the swing updates page is probably going to be pound dollar, followed by dollar CAD, maybe something in the yen crosses, either dollar yen or pound yen. We'll see. And then, if Aussie dollar acts right, if it comes down and, we're still short, but if it comes off and ends up, finding some sort of a news reversal spike low type of gig, then we might actually look to go long. Okay. So that's really where my focus is at this point. Still with pound dollar, which is the big picture story, and then, dollar CAD and Aussie dollar. Okay. And if you want, you can always check out those crosses yourself if you wish. But as I explained earlier, I do prefer to trade the separate legs of them. It just works out a lot better for me. At least that's my experience. Okay, so here's a question. How about from Kay asking, how about Kiwi yen? Sure thing. So remember, with Kiwi dollar, I go into this looking at Kiwi yen because I have two views on or on one on dollar yen and one on Kiwi dollar. One is that Kiwi dollar is coming into some sort of a corrective low, okay, probably an A wave, sideways triangle, B, thrust higher, C, up into 75.50 or so by the end of the week. So that would, that's kind of where I am with Kiwi dollar. Dollar yen, as well as documented here in the letters recently and everything and the updates, we're at resistance now. Resistance really, I had it pegged at 2025. We did go a little higher, but now we're coming off. So for me, over the next few days, it does seem that dollar yen's vulnerable. At the same time, Kiwi dollar could thrust higher. So at that point, you're kind of working with competing currencies, right? You're working with, two strong currencies, right? Dollar yen going lower is yen strength. Kiwi dollar going higher would be Kiwi strength. So at this point, I don't see this as an ideal cross to play because it's not strong versus weak, at least the way I see it, okay? So with that said, let's take a look at Kiwi yen and see if we got anything here. So Kiwi yen is at resistance. This is the structure to follow. And I'm not kidding. I have not looked at Kiwi yen in a while. These lines are just already here. So Kiwi yen's at resistance. It might be worth taking a look. Let's see what the relationship between the two legs looks like. All right, so we have equal legs at 89.70. We're currently 88.70. Check a retracement. We've retraced half, virtually half, 89.04. It's always, it's always desired to have more of a confluence between like a Fibonacci level and a slope level. At this point, we just have some slope resistance here. Tell you what, for Kiwi yen, at the upper parallel, but I would not look to short Kiwi yen until you get up to this one, which would be at least 89.70, and this thing intersects 89.70 tomorrow, and 89.70 again, as mentioned, is the two equal legs off of the low. Okay, so that may be something to take a look at. Let's see if we have a parallel in the other direction to work with. Well, not really. No, not really. It'd be a lot higher. If we look out, here's a weekly chart of Kiwi yen. If we look out at Kiwi yen, you can envision, the possibility of a massive topping out process, okay, for Kiwi yen. This big weekly reversal we had last week should not be taken lightly, and it's kind of difficult, in my opinion, to short something after it's reversed like this, especially the yen crosses, which are it's like holding a balloon underwater. So I'd be kind of wary of shorting Kiwi yen at these levels. Kind of waiting until it screams uncle, right? Wait until the bears scream uncle until you want to short Kiwi yen or whatever. But for me too, the pound yen setup's just better right here. The risk is better. The reversal this morning is better. Kiwi's acting pretty well here. I think Kiwi trades higher over the next couple days. We could get up again 160 pips from here. Kiwi, that's a big move. So not too keen on Kiwi yen short just yet. The first that I'd look at doing it again wouldn't be probably until about 89.70. And even then, I'd want to see the market trade up to 89.70 and then, turn over a little bit. So nothing quite yet on Kiwi yen for me. But that's, okay, that's what I'm looking at, okay? So 89.70. If you can get 89.70, it can reverse there, then you might have an opportunity to trade against what high you just put in. But nothing that I would suggest doing at this point. What else? Do we have any other questions? I mean, I've really kind of gone through everything that, that we're looking at. Today, I really want you to get out of today's webinar. I talked about the qualifying a parallel, right? I think that's quite important. That it helps you understand how, I look at the slope and why I would trade some slopes, why I wouldn't trade other slopes, right? Qualifying a fork, qualifying a slope, qualifying a parallel, right? After you get the median line touch, then you look for that market to touch the other parallels and those levels you might want to trade at, okay? The euro yen right now offers a pretty good example. This parallel, obviously traded around it, did find support at, lower parallels. These were really sliding parallels, okay, that extended off of here, low here. And now you look at support from one of these parallels, either the median line or this sliding parallel here. I'd be more likely to look at the sliding parallel because the market did make lows there and really throughout yesterday before taking off a little bit. So, watch for 135.35 support in euro yen. If you get that, you might be able to go along with a very, very tight stop. I'm talking like a 20 pip stop, okay? 35.35 with a stop under, say, 35.15, and be able to take this thing up higher, towards 36.60. It's a 5-6 to 1 reward to risk. So that might be something to take a look at as we get into the end of the trading day, especially if the S&P trades off towards the end of the U.S. session. As we know, end of sessions, bigger moves, has been the case lately that they tend to reverse in the next trading session. Take a look at the Nikkei real quickly, because obviously the Nikkei helps give you a little more conviction on what you're looking at with the yen. Okay, so the yen. So we've broken the uptrend or the downtrenders, uptrend slope. This was one reason, big reason why I liked going long dollar yen a few days ago when we did, was because we had the Nikkei slope we were right on it. Okay, we were sitting right here. So, if you remember, the dollar yen entry was like a 118.40 something entry with a pretty tight stop. It was like 18.19 or something that stop. So, the reason to do that, or why we did that, was because we knew that, Nikkei was trading here, just yesterday, and if this thing was going to go, then dollar yen was not going to work at all. So there was no reason to have a good large stop, but it did turn higher and it worked out. So now with the Nikkei, we're getting into some resistance, I guess, from this fork. Okay, it's a lot more dicey here when you're looking at longer term stuff, of course, but helps kind of to figure out if we want to actually, go the other way with the dollar yen. So we'll see. Yeah, nothing of confidence yet with the Nikkei just yet. This could be a triangle too. A, B, C, D, one more drop in E. Maybe send dollar yen back to 1750 before a bigger breakout. Just a thought. All right, so that's it. I'm really, I'm pretty much finished here. So I'd love to answer any questions if you guys have any. If not, this will be archived. I'm recording it. So if you missed anything, go back and check it out. We really went over, a little more detail, kind of pound dollar earlier, what to look for as far as the short position is concerned. Went through some pound yen. Looked at, obviously, some of the commodity currencies, Aussie, Kiwi, dollar CAD, because I think we're getting some interesting spots as far as that's concerned. And dollar yen, too, okay? But there's not a whole lot to say about dollar yen other than that we're at an area where I think it's going to be tough to push through with significance. Dollar yen, it's basically from here up to 120, what is it, 120.70, 120, yeah, 120.70 could be tough. Brendan, any thoughts on dollar MEX? Yeah, the dollar MEX is at resistance now here, right? So here's the big fork, right? Here's dollar MEX. It's, pushing up into resistance here. I mean, runaway markets, kind of tough, I guess, to trade, at least for me, other than just hold it. We're there now. You can see on the weekly a little better. You can even see on the monthly even better. So, yeah. Dollar MEX is at an interesting, the upper parallels where you be at risk of some sort of a pullback. I mean, but, it's not going to trade it that way here. Let the market show you something first. See what the momentum looks like on dollar MEX. I mean, it's 240 state is very strong. This could be like a diagonal, but if it was, you'd want to see the market kind of be creeping into the highs a little bit more. This is a pretty strong move into the high. So, you kind of triangle 1, 2, 3, 4, 5. In which case, this thing still has a couple, series of fourth and fifth waves higher to go. At this point, I'm not really too concerned about trading dollar MEX, though, to tell you the truth. So, yeah, I don't have much to give you in the way of a trade idea on dollar MEX at this point. Sandeep saying, were you talking about a possible dollar CAD? No, it was pretty much purely from the Sandeep. It's purely from the dollar CAD chart. I mean, when we look at dollar CAD here, we have 5 waves down, okay, from this level. And if I look at a dollar CAD weekly chart, weekly chart of dollar CAD, the weekly reversal area for dollar CAD, okay, was this bar up here from 2009, which is 127.16, which we've traded into here now. So, in fact, 27.16 in the high week this 2 weeks ago closed at 127.10. That plus the fact that you've got seasonality for dollar CAD starting to turn over. It turned over, really the week of 123. Price top 130 so far. The very bearish period for the Canadian dollar doesn't really begin for another month or so. But this is another, reason to look at it. Basically, what this suggests is that dollar CAD could go through some sort of topping process, which is, why honing in on the hourlies and whatnot and looking to identify resistance, et cetera, et cetera. So the dollar CAD, is only, I should say this too, Sandeep, the setups are always going to be a result of the setup on the price chart itself, okay? But when I look at another maybe related market. If I see something that reinforces the idea that I already have from the price chart on the market I'm trading, then yeah, it might give me some more confidence in that position. Okay, it might give me, a little more reason to pull the trigger or trade a bigger size, but it's never going to be, I'm never going to trade something, just because I have an opinion on crude. If I have an opinion on crude, I'll trade crude, right? If I have an opinion on on crude, I'm not going to trade dollar CAD because I have an opinion on crude, right? You can't. It's very difficult to manage the risk that way. Because what are you going to do if dollar CAD doesn't start doing what you thought and crude does what you did think? You can't put it. What are you going to stop yourself out of dollar CAD when crude trades somewhere? So I don't necessarily like to do that, but I do. I know what you're saying, though. I know exactly what you're saying. If you have a crude chart that suggests it might break out or something, and dollar CAD at the same time is forming a nice topping pattern, then that's great. You might have a really good trade on your hands. But as far as trading it just because of crude, no, not something that I'm willing to do. But good question. All right. Anyone else? Be happy to take a question. I'm here for you guys, so you feel free. All right. Well, all right, great. Well, thanks for attending again. This will be archived up, hopefully in an hour or so. Sometimes it takes a while for it to render, but really appreciate the attendance, and hope you guys are learning something and making some money at the same time. So take care. And Brian asking a quick question. Do you look at correlation studies? Yeah, sometimes. I mean, I run. It's more like on a weekly basis, right? I'll run correlations for the dollar pairs usually against crude, against gold, against the bond, and against the S&P. But it's just to, so I have a sense of what's really going on. Like, it's like when you hear someone say, oh, the, Aussie dollar is going to rally because gold's going to break out. Well, it's like, that the correlation's actually negative right now, something like that. So yeah, I'll run the correlations on weekly 13-week basis just so I understand what the quarter is like. Right now the correlations are actually pretty low. See, there's not really any big numbers here. So, at the very end of December, the correlations between the yen and the stock market were exceptionally high, and the dollar as well. And that was one reason why we were, putting a little more weight on a possible dollar yen turning over, because the last time we had such a huge relationship like that was in 2007, 2008. So we did get that turn lower in dollar yen from the December high down into the 17 or just below 116 actually, but whatever. Okay, so that's it. Yeah, awesome. Yeah. Brian asking how the macro is moving. Yeah, I mean, it's good to know in general if everything's highly correlated or not. I mean, once you start to see everything moving together, it tells you that whatever's happening isn't going to last. Okay, so, when things aren't that correlated, which is the way they are now, gives you a little more leeway as far as, looking at, different positions and not worrying about your positions all being correlated. That's the biggest thing, I think. All right, Mark. Good to hear. Says you learn something every time. It's awesome. That's what we hope, man. Great to hear. All right, so again, going to archive this. I'll have it up in a little bit. Other than that, have a great rest of the week, and be back later. All right, bye.